I live my life through mantras, where I always have certain sayings in my head that I always say to myself, and they're like my North Star. They guide me. And in trading, I have a bunch, and one that I'll share with you guys that I've said is a restricted trader is a profitable trader. And in the online space where we have so much content, we have so many concepts, we have so much information, that's never an issue. We'll always have some indicator, some trend line, some this, some that, some SMC. Like, there's always a reason to enter. That's never going to be the issue. The issue is the difference between profitable and not profitable is not information, it's not strategy, it's how you apply it and how you refine it and what are your restrictions. So I've just found, like, if I've got a good trade and it ticks 9 of my 10 boxes, I can't take it. If it's my non-negotiable, I can't take it. And some people are like, but it's close enough, it's good enough, you got these other reasons. But that's the restriction that defines non-profitable to profitable. And it seems like you guys are very restricted and have a well-defined plan. And that's how I don't know enough to say, but like, that's how I can determine if someone's legit or not, just by how restricted they keep themselves. Because we've all tried being loose with criteria, and one day entering on this concept, another day on that, but the restriction is what differentiates. So let's getting into that. Another thing that I like to define for myself, the analogy I give is spinning plates. I don't know if you've heard me say it before, but the idea being that as traders, we initially, as newcomers, we try to control the non-controllables. And we can't control the market. Those are external, so certain things we have to accept. And there are certain things in our control, and there are controllables, and we can definitely control them. And that's the only place we can maneuver. So the way I like to look at it is, certain people figure that out, and then they just spin one plate. And the idea is that in the circus, you spin all the plates, you got to balance them. If you spin one, the others crash. So you got to balance everything. What I find is certain people spin that plate of risk reward too much, or certain people spin the win rate plate too much. I need to have an 80% win rate. I need to have a crazy risk reward, and they focus on too much on one when they realize you should realize you got to balance everything. And for me, I found that balancing act, and I've done it down to numbers. So I know my desirable win rate, I know my desirable risk reward, and it seems like you guys are doing similar. I know my time of day to trade, my trade duration, my trade frequency, asset class selection. These are all my controllables, and these are my plates I'm spinning. And of course, I could focus on the win rate one and get an 80% win rate. But what's going to happen? If I want to have a high win rate, I've got to be very selective. That opportunity doesn't come so often. So my trade frequency gets really low. That plate might crash. So I've got to spin the trade frequency a bit more. So then if I want to trade a little bit more often, well, my win rate naturally has to come down, and you balance them. So getting into that analogy, if you guys could explain to me, what are your numbers? What do you aim for? And your average trade, if it reaches your destination that you wanted, what is the average risk reward? What is the average win rate you want to have? Trade frequency, trade duration, all of your controllables that come to mind, where do you like to keep them within your strategy?
Sure. So when I started, especially when I started showing my trades live, right, I knew my win rate, I knew my risk to reward rate, and my win rate is about 57%, right, with my risk to reward being about a 2R multiple. When you're live streaming,
is that 2R in this? Because you're taking partials along the way. So is it
2R is going to be the whole trade? No, the 2R is going to be the whole trade. On average, the whole trade, the way I'm going to take that, right, is going to be on average over 1,000 trades. It'll be 2R. But some trades will be like a 3R, some trades will be like a 4R. But then overall, some trades might even be like a 1.5. But overall, I've noticed with my data, it's about 2R. It's about 2R. But the problem is, when you have a 57% win rate and you're live streaming, people don't like that, because it's why don't you have 100%? You said you were a profitable trader. Well, that's not how trading works, right? So the way I like to explain how the win rate especially is, let's say you have dice, right, and you have 1 out of 6, right? For dice, let's say you want to roll the number 3. Out of 10 rolls, out of 60 rolls, how many times should you roll the number 3? 1 out of 6, right? So 10 times out of 60 rolls, right? But the problem is, you're not going to do that. There's no way that you're going to get that 10 off on that 60 specifically. It's not it's not guaranteed. It's not guaranteed. You need to have 1,000 sample size. So the more the sample size goes up, the more the probability of the trade that you have goes up, right? So the thing with me is, like, sometimes I'll lose 6 trades in a row. Okay. But then sometimes I'll win 6 trades in a row, right? But I know over a long period of time, that's going to be my win rate. My win rate is going to be around that 50 to 60% win rate, right?
So on that topic, I like this, because a lot of people, they get stuck on small sample size, and they're like, okay, I've taken 4 losses in a row. I need to switch it up. I need a new strategy. I need a new plan. Something's not working. When they maybe just reflect and say, that was part of the plan. That's the factored in losses we have. And as you just said, let's say I'm supposed to take 10 losses on a 20 trade sample size. Those 10 losses are not going to be conveniently win, loss, win, loss. It might be 10 losses up front and then 10 wins. It could be. It's not likely, but it could be. And people don't let the probabilities play out, where we just know if it's a valid loss and it's part of the plan, and it might be just a losing period, that's okay. And we've got to stick to it, and people start to switch it up. I just wanted to chime in there. And then the win rates is, yeah, I think you guys have gathered. It's not a how good you are as a trader. It's not a performance thing. It's like the better trader is not the better win rate. It's a selective thing. It's not a performance thing.
One
and
thing
it's where you keep it. Yeah.
One thing I would just say about the win rate as well is how you said a better win rate doesn't mean you're a better trader. Is I feel like on social media a lot of traders are going to flex the win rate. I've been green for 3 weeks in a row. I've been, I haven't taken a losing trade in 3 weeks or 4 weeks. But it's like at the end of the day, the people that actually know how to trade, it's like, okay, sure, but what's your risk reward on those trades?
It's
right?
that plate thing. It's
exactly,
like there's always a trade-off.
Exactly.
So if I have a really high win rate, then my trade frequency is low. So if I want to bring up my trade frequency, I've got to trade a lot of things. So now I need to be trading 20 currency pairs. Okay, well, that's a problem maybe. And there's always that equilibrium and sweet spot.